my affirmations, right? Now, I do mine. And what those affirmations do, I want you to understand. I am sitting here as someone who created a strategy. I am sitting here with someone who's speaking to people consistently around the world. Now, that's not what I started out for. When I made my affirmation and when I spoke my affirmation, the only thing I wanted to know is how to count pips, right? How to count pips. How do I count pips? How do I understand the movement of the charts? You see, I came from a financial background where I am somebody who did retirement plans. I'm somebody, so I couldn't comprehend at that point in my life how you could profit on a sale. Like, I could not comprehend how I could profit on a sale. And so in understanding that, that was something that I had to dive in and understand, and that movement that actually and literally happens within the charts. Guess what, guys? You know, my affirmation was not of frustration. My affirmation was not of agitation. My affirmation was I'm a master Forex educator. I'm a Forex educator. And that was my affirmation. And so the energy you put out, the energy you put into the atmosphere, the energy you send out is the energy that's going to manifest. And I want you to understand that this is why we do affirmations on this call. This is why we start each and every call out this way, because the skill set is the easy part. The taking the trades is the easy part. It is your energy, your mindset, and what you want to manifest in your life. That is where you have to make a shift. So let's make that shift tonight. So let's go ahead and get started. My charts are pretty much set back up. So let me go ahead. I see I have California on the line. Good evening. Good evening, Columbus. Good evening. Good evening, Tavares. Good evening, Cleveland. Good evening, Minnesota, New Jersey. Good evening, Cleveland. Tampa. Good evening, Lauderhill. Good evening, Chattanooga. Good evening, Bahamas. NYC. Good evening, Moultrie. Good evening, Tampa. Good evening, Tawana. Good evening. Good evening. Let's see. I see Colombia. I'm just kind of reading through these. This is what I mean. This should be a process to where I have to kind of skim through it, right? I see we have so many more of you all. Claremont, Orlando, right? Yes, and this is definitely right. You want to make sure that you are walking through this. You want to make sure that you are putting at Jacksonville. Good evening. See, that's what I mean. I am an educated master trader anointed for wealth. I am an educated master trader anointed for wealth. And as a matter of fact, I see you mentioned Think and Grow Rich. That is actually one of our foundational books for mindset and that shift. So absolutely. And so, yes, I'm an educated BYOB master trader anointed for wealth. I am the signal. All my trades in and profit, I am 777. And I see how you guys add to it. I am a BYOB wealthy woman having global impact, right? You riding the wave of wealth. So go ahead and add to economically unbothered. Guys, just do not take away from it. Now let's go ahead and get started. Now I'm going to tell you what this call is supposed to be about first and foremost. Let me share my screen with you all. And I'm going to actually start right here. Let me see. You should have it coming up here in just a moment. Having to refresh a few things. All right. Now, what we saw this week, right? What we saw this week is the fact that the market itself was kind of asleep, right? The market itself, right? We ride the wave of the market. We don't force trades. We don't do any of that. But what we do is we ride the wave of the market. And why do I have this up? Yes, we're going to talk about the strategy, but there are a few things I definitely want to talk to you guys about right now. So I'm sitting here on the news, right? There are different fundamentals that impact our market. So I'll talk to you about the strategy. Let me tell you what I want to do first, okay? What I want to do first is I want to be able to show you all. We've been talking about a top-down analysis approach, right? We've been heavy on a top-down analysis approach. And understanding that we've been definitely talking about it, I want to show you why that's so important. I want to show you guys why that top-down analysis approach is so important and why it's going to help you with the tools. You see, now what the BYOB cash out strategy really is price action with a twist. There is absolutely no way you should even believe, right, that you're going to learn how to trade or be a successful trader without understanding that what some of the things that you have to do is understand market structure, how the market moves, developing and building that relationship with the market. So those are some things that you must do, right? You have to. There are tools out there, and that's why I said we're going to get into the tools. We're going to show you how to utilize the tools. But there are some tools that you only kind of see from a scalping perspective. And so what we want, because you're an educated trader, we want you to have that relationship, because anyone that is actually a successful and profitable trader, I'm not talking about gas money. I'm not talking about enough money to pay the daycare bill. I'm not talking about money that, no, we're not talking about that money. We're talking about money, right? We're talking about big bank frequency. That's the kind of money we're talking about. Anybody walking at big bank frequency is actually someone who understands how the market moves, right? And so that's just like, think about it. How many people married, right? People have relationships. You're dating somebody. We've been talking about relationships with the market. And so understanding that people operate, right? The people who have the best relationships are people who know each other well, that are people that are able to read each other. Like, those are people who are able to, they've cultivated their relationship. You have some people that are, they're just there. They're in a relationship, right? You get what you need out of it, and then you go about your business. Well, it's the same thing. The market is the same way. And so you're not living at your full potential of what this market could give you if you are in that other scenario or that situation. And so what we are here to do is really give you and paint that picture of what's happening. Now let's talk about the type of markets, okay? Let's talk about it. So the type of markets that you're going to have is really three different types of fundamental impact, right? We're going to talk market structure when we go over the strategy. We're going to talk the market structure, right? We're definitely going to have that conversation. But in understanding the market structure, there are still fundamentals, because what happens is you understand how the strategy works. You understand how BYOB cash is. I understand the blue line cross over the red. I understand that, but why is it not moving? A few people asked that in the chat this week. Didn't a few people want to know why if the market's not moving, and why are the GBP sleeping? Why, and the why? Well, that's where my fundamentals come in. So you have your type of markets where we talk about central banks, right? You talk about your geopolitical and your economic release. Those are the type of markets that we have. Now, this week, what do we have this week? This is why I have it up here. What do we have this week? We have a G7 summit, right? Our G7 meeting. Now, we've already talked about the inflation. If you were on the calls, you heard about the inflation. We've also already heard about, the Brexit situation that's happening, which is why, after the numbers that we have from NFP, Brexit is why it did not break that significant level. So we've talked about that. But now let's talk about what's happening right now. What is happening tomorrow? What is going on tomorrow, right? What's happening now, right? This is all day. Our next release is Friday, June the 11th. So you see, we have many folders, many things going on tomorrow, but also, right, all in the Saturdays, we have Euro that's happening on tomorrow, on Friday. It's also happening on Saturday. So this G7 meeting that takes place. Now let's read this, right? Because we need to understand the market, okay? And I'm doing this, I'm going a lot deeper tonight because of the simple fact that this is impacting my training. Or no, so I'm joking about it, but it's real, right? So what I wanted to show you, and to be able to show you how the scanner, correlates, and how, my triggers from the Vibrata, and how all of these things correlate and work together, right? And why that's one of the ones I lean on most, in training, to help you understand the market. Well, the trades are just not there right now for me to really dive in and show you. Why? Because this is what we're having right now. So when we look right here, you see the G7 meeting is a meeting of the finance ministers, like, look, from seven industrialized nations. All right. So what is our major currency pair? What is our major currency pair? That's USD. So that's going to impact everything. And then look, you have the United Kingdom. I mean, you have everything in here. And so the what moves, right? The market, where's the most liquidity, most liquidity is right here. So it's no wonder the market's not moving. It's no wonder why this week the market is slow, right? And the frequency is irregular. But coming out of something like this, right? Central bank movements, right? The central bank movements, central bank decisions, all of those sorts of things, guess what? That impacts our ADR, which is our average, the average daily, right? The average daily range that takes place. So on our ADR on average, without looking at a specific currency, can be about 150 pips movement, right? For movement. And what you're seeing right now is that that's just not the case. That's not the case right now. So that's going to impact our ADR. And so that's actually what you're seeing and why we have absolutely no market activity right now. So we ride the wave. Wasn't that somebody's affirmation in here? That we ride the wave of the market. We ride the wave of the market. They ride the wave of wealth, right? And so understanding that you ride that wave of wealth, then now you understand exactly why the market is doing what it's doing. And so I'm gonna go ahead and dive into our strategy. But before I do, and then I'm gonna still walk through, it's just that we're just gonna do it in two parts. We'll just do it again where I can use some live data next week. But if this is your first time here with us this evening, your first time on the call, let me get a 111 in the chat. And if you're still learning how to cash out, let me get a 222. Your first time here with us this evening for our BYOB market talks, our tools training, let me get a 111. And if you're still learning how to cash out, let me get a 222. Awesome. Welcome, 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 and welcome back. Welcome, 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 and welcome back. So before we dive into the strategy, before we dive into understanding, is there any questions, comments, or testimonies? Drop it in the chat. Any questions, comments, or testimonies, drop it in the chat. Okay, drop it in the chat, drop it in the chat. All right. So, and of course, as we kind of dive through this evening, you can always drop it in the chat, right? You can always kind of drop your questions, your comments, your testimonies. You can always kind of drop that in the chat as well. And of course, I'll get to those questions and I'll answer them. So now let's talk BYOB cash out. So we have Euro GBP, I have GBP USD. Those are the two biggest ones that I'll be talking about here this evening. Now let's see here. So what I want to show you and where I want to start, I like the movement on this one to kind of give you, like, I always want to be able to give you from a trading standpoint, from an analysis standpoint, I always really, kind of want to give you, like a great foundation, like a picture. But I want you to understand that the picture is not always the same. The picture does not always look like this. Our picture is not always going to be as clear. So I want to give you the clarity up front. Now, here we are, we're starting right here. All right, now for those of you all who start from an understanding standpoint, our foundation is 15-minute chart. So we talk support and resistance. You can actually go back into the academy and start studying that there. And then also we enhance it on our YouTube channel. But what you want to do is you want to start here on a 15-minute chart. 15-minute chart is where I have my three indicators. Okay, I have my three indicators. Now, my three indicators for deeper understanding, like I said, this is price action with the twist. You have two lagging and you have one leading. You never want to use all leading or all lagging, right? So with price action, right? With price action, what's going to happen is you with price action, you're going to have your trend that you focus on, your moving average that you focus on, and your support and resistance that you focus on. A price action trader, that's pretty much what they focus on. Whether they're doing naked charts, some of them don't use moving averages or what have you, but a lot of them do. You talk about naked charts, or just basically looking at price, right? Price action means I'm looking at the price and movement in the market structure, and I'm making decisions on how I want to trade, analyzing the candles. Well, when I say with the twist, because my moving average is in my stochastic, right? That's my leading indicator. We looked on Dogecoin previously. Well, we kind of showed you that the stochastic is uses because it was created in a development, right? That because we were able to go back to when it actually hit the charts. And it's the same with anything though. But my stochastic is based in using pre-market activity to determine, to kind of give it a direction, an understanding, right? So that's why my stochastic is my leading indicator. But trust me, it's not standalone. You don't take a trade just because my stochastic is doing something, okay? We do not take a trade just because my stochastic is doing something. Then my Hikinashi candles are trend candles, okay? These are actual trend candles. I can switch these back to my Japanese candles, but this would not be the BYOB cash out. I'm switching it back to kind of show you that this actually interprets, right? We interpret for it, it's an interpreter, right? The Hikinashi candles to tell you what these are saying. My traditional candles, my Japanese candles, you see all the activity between the buyers and the sellers. You know, I kind of like that bottom line up front, right? What's the bottom line? Either if am I buying or am I selling? I don't need to know everything that you guys have going on. And so that's really what my Hikinashi candles give me. Now my PSAR, my parabolic stop and reversal, that actually acts as a trailing support and resistance. So that is support and resistance. That's why we use that as a stop loss. The market is giving you the boundaries, right? So the market is telling you the boundaries that you're operating in. And that's the BYOB cash out, right? Now let's talk about how I do this. On my 15-minute chart, right here, on my 15-minute chart, as I'm looking right here, first I'm looking for my leading indicator, which is down here, which is my stochastic. That blue line cross over the red and a downward momentum. Then, of course, I have that red candle with a flat top and my PSAR flip to the top, right? Let's see, let's get here. Let's go ahead and do this. I'm on my 15-minute. Now, this is where you can get your 10 pips and cash out. 10 pips. You notice we started back here. I'm going to put a line because I want you to understand that this always starts first. It starts first, and then is when my lagging indicators will catch up. So this is my stochastic is not where I just automatically flip, right? This starts and then these other two catch up. Now let's go ahead and jump to my hour for my time frame confluence. As you can see, I do not have confluence, guys. No, ma'am, no, sir. So confluence, 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 confluence. And even though this candle, I'm gonna move this to the side a little bit, even though this candle is pulling down some, where you might say, could I drop down to my 30 because it's a GBP pair? We can do that with GBP indices, HFX, depending on what it is, you know, our cryptos. But, you know, when I'm sitting here with that, it's just like, but then I come down here, my stochastic is still in a buy. So the answer is absolutely not. So let's go ahead and how far much more do we have to wait? So we would have had, this is 45. So we just would have waited, you know, to the next candle, which that next candle, right? You can start seeing some movement, some curve, but let's come on over here where this actually turns red. All right. Put that back on over there. Let's look at where this actually turns, where now my stochastic is curving down. It's giving me some indication, and I actually have a red candle. Now, granted, I have a PSAR flip right here. I'm not looking for that. All right. I don't need that. I don't need that to happen. Right. Now, when I come here, right now, I just have to wait on that flat top candle again. I have to wait for everything to be in alignment. And don't sit there, well, I gotta wait again. Oh my gosh, I gotta wait again. Yes, you have to wait again. Right now, you're waiting 40 years for a retirement plan that's not gonna happen the way you think it's gonna play out. So why can't you wait 10, 15, 20 minutes, an hour for a trade to manifest so you can walk out and profit? I'm just saying, like, let's shift our mindset, shift our energy, shift our results. So now you see that this is actually a net sale, and that's actually selling right there. All right. Now, so that's the BYOB cash out. I don't want to spend too much time. Ms. Anderson does an excellent job going over that on our basics call, you know, as far as kind of walking you through the basics and the foundation of the strategy. I definitely wanted to touch on it though, as I do on every call, right? Definitely wanted to touch on it on every call. But what I want to show you, right? Let's go ahead And let's talk top-down analysis, all right? What is top-down analysis? We've been doing this week after week after week, right? Week after week after week, except last week, because Dr. Byford did a prime time, okay? Now, top-down analysis is understanding the big picture of the market. It's me analyzing and looking at my higher time frames, okay? That's what a top-down analysis approach is, right? That's ultimately what's transpiring. Is I'm able to look at my higher time frames where all the movement is happening, and then my lower time frame is where all the activity is, okay? That's what that is. Now I'm gonna take off the 5 and the 15, okay? Normally when you do that, we have many trades. I've been looking at this throughout the day, but I really didn't want to shift my training like that because I want you guys to understand the impact that the market has. That's why we started this call out talking about some of the fundamentals, or, we started this call out talking about a few of the things that actually, take place, right? That's why we started this call out that way, because I want you to understand. So when we come back and do it again next week, after the summit, then hopefully we'll have the movement that we want, because that's what typically happens after a summit. And, then hopefully we'll actually have the movement that we want to be able to show you how to implement all of this. So here I am, I'm just looking at higher time frames. Now, periodically throughout the day, this has been 5 trades. It's been 0. Like, this was completely blackened out. Like, there was nothing. These just popped up at the top of the call. It's not even ones that were on here previously. And so obviously, just like with the harmonic scanner, they're not there, right? It's not there. And those trades won't be there. So let me come back over here. What I want to do is I want to log into IM.Center. I want to pull up our strategies, right? Because I want to, the same thing kind of impacts. Now, just understand, when I talk about we're going to dive into tools, these are a lot of the tools that we have that we're going to be able to analyze. That's why I said it's going to take some time, right? You got your HFX. You saw Ms. Brantley using this one last night. And of course, we have our, you have your digital currency where we have the harmonics, the swipe coins, right? We have all of that. So we're going to take our time and go through all of this. But we already know we've been leaning very heavily on the harmonics, okay? And that's because they are harmonic patterns and they give reversal patterns. And I really believe that from an education and a foundational base, that's a good place to help you start seeing the market. Now, I already have it where I clicked it. And so just for clarity as well, I know you guys see that I come to our website, imlwebanalyzer.com. That's ultimately where I come. My screens are dark. I type it in. But if some of you all might like the Vibrata from this perspective, you can also come into IM.Center and also pull up the Vibrata. So for some of you all, when you look, you see it's already, the strategies are up here. BYOB cash out is right there. Definitely has, like I said, you see the same thing. It's the exact same thing. It's just a little different format. If I come up here on my higher time frames, actually has a few more that are sitting on here, which is fine, but I've already gone through. You see, they've been quite a while, so they just fell off on the other website, right? Same thing, 5 hours, 9 hours. I don't need all of those, right? So you can see where those actually fell off already. Now, let's look at the harmonics. So this is ultimately what I wanted to be able to do, all right? So you guys can understand my intent, the purpose, to really be able to show you. And then, like I said, we'll probably have to dive into it a lot deeper next week as well. Is these higher time frames, right? They're going to trigger. All right, so they're going to trigger. GBP NZD is one we've been monitoring. It's already at the take profit 3. That's one that we have been following. GBP JPY. The NZD just kept popping up. The ones that typically sit at the top, these are the ones that are the newer ones, right? And then of course the ones that are down here toward the bottom, these have been on there, and look how long that's been on there. So, but there's been nothing, they'll fall off, but there's been nothing there that's kind of pushed it through, because we once again the market this week. Now, as they push through, if something triggers and it does not play out, guess what? It's okay. it's okay because it'll just fall off of here. This is why this is not a standalone tool, but it is a tool that can help you begin learning how to make sure you see support and resistance lines. It is a tool that can help you understand reversal patterns. It is a tool that can help you, right? And then of course, if sometimes, you know, the 15-minute chart, we never pull from there, but I wanted to kind of show you why as we put it back onto the vibrata, you know, so that's a lot of what my intention was tonight. Now, when we come back up, look, see, it's gone already. It was just there a minute ago and now it's gone. This is what's been happening all day, and that is no bearing on the tool. It's all the market, right? It's all the market. Now, as we look at this, let's go ahead. Let me help you guys. Because let's come here from this top-down approach. You notice that while we were here, we saw some GBP. Which one was I on? I was on this one. And I saw, don't tell me it's gone too. And it is. It has already pushed off. I had GBP USD. We was ready to go. But you see GBP NZD still sitting on there. My Euro GBP is one of the ones that I have up as well. So actually, this is a newer one. So we've gotten some new triggers since, right? This is a newer one. You can kind of see, let me even see these numbers. Yeah, because the one I had was actually triggering for a sell. So yeah, since the call has started, a shift has taken place. Since the call has started, a shift has taken place, right? Just since the call has actually started, and that's okay because I was just trying to show you some historical data where, you know, this had actually came and it had actually pushed up. But let's just jump back over here, all right? So I can kind of, you know, help you guys. So now the market is gonna do just a few things, right? Let me stay on my GBP USD. The market is going to go up, is going to go down, and is going to go sideways, okay? And you know what I want to do, you notice I'm on my 4-hour chart right now, right? You see that I'm sitting here on my 4-hour chart. Now, if you guys have any questions or comments, you need me to slow down, any of this, trust me, we're gonna do this again next week. And it's kind of good if things are happening this way. But if you have any questions, any comments, anything, as we kind of dive through this evening, make sure you drop it in the chat. Don't wait till it's over. Don't wait, guys. I'm telling you right now. So what you're seeing right here, right? You notice I'm gonna go ahead and drop this support and resistance line on here, okay? Let me drop this on here. And I'm actually going to take this off of just the higher time frames because I do want to see if anything does trigger, you know, on these. I do want to know if something's going to trigger on these, right? So as that feed begins to fill back up. So what we're seeing and what we've been discussing is that we are at an area of resistance, right? So top-down analysis. Oh, you're so welcome. So, you know, you're so welcome. You say, oh, okay, I'll go back and look at it. But so what you're seeing, matter of fact, let me see right now. If you said that one pulled it up, because I didn't pull it down. So let me see. Let me write these numbers down real quick. Actually, 41219. The numbers are just a little different. Remember, I think somebody asked me that this morning, right? Actually, and now you know what? This one pulled way up and it's trying to trigger for a sell. That's not the one that I was looking at earlier. Somebody asked me that, like, the numbers can be different, guys. And that I think I was like trying to explain that to you guys earlier, right? They can be different. So actually, let me just grab a screenshot real quick and then let's go back over there to the charts. Get back over there. All right. Come on back over here. So I appreciate that. So now, and that's actually probably gonna be helpful with this, right? So as I'm looking here, all right. So you notice we're at this area. Now let me see, what I want to do is a few things is I'm gonna move this up to what we call an institutional level. So when it ends at zeros, that's what we call an institutional level. And those institutional levels, right? Let's talk about that for a minute. I think I told you all before, like, so I was just with my sister, like probably for the last week and a half. And she is the only person in the world that I know that does things to the cent, to the penny. You know, everybody I've ever met in my life, other than her, actually run things to like, okay, if something is seven, let's just say it's 7.45, right? You'll be like, oh, it's 7.50. If it's 7.92, you'll be like, oh, it was $8. Are you with me? Am I right? You know, so that's ultimately, you know, how we do things. And so if that we're people, remember, these are people that are making transactions. So institutional levels are not proven on any level, but it's just like when you think about these levels, right? You can kind of look right here. And so that's really what those institutional levels are. Is I'm not going to go through and just adjust it for the sake of time. But when I come through here and you can kind of get as close to those zeros as possible, right? You can make those adjustments, but that's what an institutional level is. And if you can kind of see that as we're around those institutional levels, that's where we're finding some support and resistance lines, okay? So I did not go in and adjust them, right? But I just kind of want you guys to see that. Now, let me go back and what we were talking about. I'm gonna jump up to my daily because I want you guys to see that we are at a significant level. Like, right, this was 2018. 6 months is significant. Several touches and rejections is significant. But here we are. Didn't we just talk about 6 months as we started? Just call, haha, that's funny. So, but is it right here? You see, that's 2018. Now, when I talk about Brexit, this didn't break through here, right? The US dollar disappointed us. This should have broke through. Well, Brexit is why it didn't. Brexit is why it didn't push through. And now we're consolidated, like it's just hanging out. It's doing nothing because of the summit. All right. So I want you guys to keep that in mind. Now let's talk about how the market moves. Okay. We're still on that top-down approach, that top-down analysis. Because as we're looking in here, right, you see, and I want you to see, because this is going to help you when I bring these tools back in next week when we get some alerts, right? So let's talk trend lines, right? What do I always tell you? Support and resistance is your lifeline. The trend is your friend, okay? So if I'm gonna come in here and I'm gonna put a trend in here, okay? Let's put this trend line here. All right, don't get hung up on what yours look like, what it doesn't look like, how it's not at the same point, same tip. You need 2 touches. Now, once again, GBP will disrespect. It's a little disrespectful. So GBP is a little disrespectful. So it broke through the line, but that doesn't mean it broke the line, right? Hey, it's like the child having a flip lip. Okay. It broke through the line, but it didn't break the line. And so that's ultimately, you know, what's happening with that. All right. So once again, I'm gonna try to slow down because I want you guys to see this. Now, actually, I'm gonna take, before I even put these on here, let's take those off. And let's change the color on this one because I want you to stay over here with me. Now, what I'm gonna do is I'm gonna take this line and I'm gonna clone it. Okay, let's clone this line. So now, is anybody this is what we call a channel, right? The market goes up, the market goes down, the market goes sideways. And so as the market is going down or the market is going up, we'll have what is called our channels, right? That's what we'll have. So you notice that I can also come over here. Well, this one is kind of where it started into that consolidation, but I do have my 2 touches. If I really wanted to, which I'm gonna just focus on that one, I can come over here and put another channel inside of here as well, where you can kind of see once I have those 2 touches, right? Once I have those 2 touches, I can see how the market stays within those channels. Are you guys with me? Can I get a 555 in the chat? Are you with me? Can I get a 555 in the chat? If you're with me, can I get a 555 in the chat? All right, awesome. Awesome, awesome. Now, so this is that big picture. I'm on my higher time frame, okay? So now I'm understanding what the market's doing. So what happens is now this is sideways, right? The market goes up, the market goes down, the market goes sideways. We know why this is happening. All right. We understand why this is happening. But now you can come in, put my lifeline in there. Let's make sure I have my lifeline, and I can put my support and resistance in here. And this is all going to make sense to you in a minute. So I can put my support and resistance, and now you can see, right? We understand that this one is at a significant boundary line, right? So let me ask you a question. And that's why I was glad you actually found that sale that just happened. Would you take a buy right here? I get a trigger from here, from any tool. Would you take a buy right here? Thank you. 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 All right. And I'm saying that because you don't want you want to know how to properly utilize these tools, but you have to also understand the market. So what happens with our harmonic scanner, right? What happens with our harmonic scanner is, let's talk, right? I'm on my higher time frame. Okay. So the market went up, it pulled back to the support line, and it pushed up, right? That's what our market's doing. So over here, the market's going down, right? Come back, impulse, correction, continuation, correction, continuation, correction, right? This is just sloppy price action, right? This is just sloppy price action, because it ultimately, like, it came up and it touched it. But what do we always tell you? Because some of you guys will be like, oh, we have a bullish market. The market is buying. It's not buying, right? It's not buying. What it's doing is it's in a correction. It's still bearish until it breaks that last significant level. And this was that level, and that level never got broken. This was that level right there. That level never got broken. So we were still bearish, and we were inside of our channel, right? So that got bearish, and then we were inside of that channel. What the harmonic scanner does is it comes through here, and it'll identify these reversal patterns, right? It will identify these reversal patterns. And so now if I come down to my hour, right, you can kind of see what's happening. So these patterns that are in there is what it will identify. And so if we take what we just received, right, it was on the hour, and the reason why I want to do it again next week is because of the simple fact that what type of market we're in. That's ultimately why I want to do it again next week and kind of show you how they correlate. So today you could walk away with an understanding, and next week you'll walk away with some application, right? So let's drop these numbers in here. All right, let's drop, and I'm gonna use a different color for these. Okay, any questions yet? Any questions? Anybody? So you got my master traders are with me, right? You guys have this. I told you we'll slow it down if we need to. 14219. All right. Now, let's put the second number in here. Now you guys know I adjust my numbers. So don't get this. These are based off of what? Somebody help me out. These are based off of what? Somebody help me out. Put it in the chat. Anybody, just anybody. You see how they falling off? All right. And they're Fibonacci levels, right? Fibonacci levels. 40812. All right. So now what just happened is a harmonic pattern was identified. Let's go back up to my higher time frame. I want you guys to see it. All right. So the market goes down, the market goes up, the market goes sideways. What are we doing right now? We're going sideways. Now I want us to have a hypothetical situation where what we do know right now is that it's not taking like, let's say it's not a GS summit, right? Let's just say the market was just in a regular pattern where it's going sideways, because I don't want you to feel like you're going to take a trade and then the trade don't happen, or you're going to take a trade and, but because I want you to understand from a technical analysis standpoint right now, right? That's what I want you to see, is the technical analysis, right? The technical analysis, right? We already talked fundamentals, but I want you to see the technical right now. So knowing that my market is kind of been up in this area right here, knowing that, now how many pips is in this move? That's 98 pips, right? GBP. So that's what GBP do for your life, right? So knowing this, what is the difference between fibs and pivot points? Fibs are based off of, like, let me see. Fibs is the math that you didn't want to do when you was in school, pretty much. So a Fibonacci level is, when, let's say this is that point and I use my swing high to my swing low, then for my take profits, when you drop I never use them. Is it? So let's say I got my swing high, my swing low. And so if I drop a fib on here, I dropped it on here the wrong way, but hopefully you can see those numbers. Like, you can see that they use the percentages right here for your take profits. So you can kind of see like those take profits that are right there. Yes, Dr. B is going to address it on this call. I say it's the math you didn't want to do. So now he'll answer that question on the next call. Thank you, Dr. Byfoot. Now the pivots, though, I love the pivots. Pivots are support and resistance lines. So the difference here is, I can show you this part though. Like, no matter where I am, I'm gonna always have a support and resistance line in the market, right? That's a support. I don't want to put it up there while we're working, but that's a support and resistance. That's a support and resistance. So you're gonna always have those support and resistance lines in the market, right? You'll always have those. Here I am on a daily, and they will always be there. So no matter how far I went back, we went back to 2018. I'm at 17. You notice how this is always going to be impact. It's always going to have impact on the market. So what it does is it helps me in my future as well, because I know that if the market comes back down in this area, it's going to respect this area. Now, what pivots are is nothing more than support and resistance lines based on current activity. So if I put pivots on here, right, which we've trained on pivots, if I drop the pivots on here, you see how my pivots adjust, right? No matter what time frame you're on, those pivots will adjust. Notice how my pivot point is down here, but yesterday it was down here. So they're going to adjust. But if I go back, they'll stop, right? They'll stop because they're based on current market activity. So they're calculated based on what's currently going on in the market. So they are still support and resistance lines. It's just where they take place. And the fibs are based on the swing highs and the swing lows. And for me, the reason why I personally don't use them, a lot of people use them and are successful with them. I personally don't, because where's your swing high and where's your swing low, right? I like the market to tell me, right? I like the market to tell me where it's going and what it's doing. That's what I like. I like the market. The market tells you, if you listen, you'll hear it. So that's what it is for me. Now, you're very welcome. And then stay tuned, because Dr. Byfoot will be able to give you that why behind the what, as far as that's, concerned too. So of course he'll bring some added value to answering that question. So now we know that here we are at this significant level. You notice how with my 4 hour, we just got a new 4 hour candle, okay? We just got a new 4 hour candle at the top of this call. We get our 4 hour candles at 9 o'clock, at 1 o'clock, right? 5 o'clock, 12, and then the cycle continues, right? We get our 4 hour candles every 4 hours. So we get our 4 hour candle right here. And you notice how it's rejecting off of this line. We already know we're at a very significant level. Even if it bypassed it a little bit, I already told you, GBP is disrespectful. GBP will break through a line and be like, what do you mean? I don't even understand what you're talking about. So that's what can happen. You see, it broke it up here, but they didn't mean anything. It didn't go anywhere. So, and it's just like, and the GBP look at you like, I didn't do anything. I don't know what you're talking about. I didn't do anything. So, so it's getting rejected right here in this area. And so here on my hour, look at the rejection that's happening right here. So even here I am, like right here, is rejecting off of this line. Look how my stochastic is now flatline. So now we notice that my harmonic scanner picked this up, right? Hasn't played out yet. And it picked it up a while back, because you notice how we're down a little bit, but yet it's still coming over here and it is rejecting. It's rejecting. And so if this plays out, right, of course, we don't just jump into trades, but even just to that take profit one, that's 50 pips. All right. So once again, it's a support and resistance line, right? Once again, it's down here, but there's nothing saying take that trade. US dollar is not strong enough to pull it right now, right? It's absolutely no reason why it should be sitting up there. With all the inflation talk and everything, I'm telling you guys, cut off your traditional news and listen to financial news. Cut it off, unplug, untune. There should be absolutely no CNN, no MSNBC, none of that stuff in your life if you want to be a successful trader. I'm just going to put it out there as blunt as I can help it. Those news programs are for emotions. They're there to create an emotion in your life. That is what they're there to do. They're not there to report the news. They're there to create emotion. They get paid on views, right? They get paid on what. So of course they're going to create emotions and not give you information in order to have you be successful in life. That's that question. What is it that you choose? What do you choose today? What do you choose to do? Do you want to walk in wealth? And do you want to walk in that understanding? Or do you want to walk in emotions? Right? That's the question and the answer that you have to decide today. So now, as I look at this, okay, and I'm here, you notice we're getting rejected. Now, the outcome, obviously, the G7 summit is because it's money. The outcome of that is obviously going to help understand where the direction. You notice how my stochastic was coming down. This is curving back up. It's just kind of sitting there. But if I was just if I'm looking strictly at my technical analysis, this harmonic pattern is definitely, it should play out. I mean, it should play out where it will reject off of here, right? If I drop down to my lower time frames, you notice how this was significantly overbought and then it started pulling down. So if it was a technical analysis, we know why it's not moving. But if it was a technical analysis, then of course we would be able to bring that trade down. We would, and this obviously is where you come in and you take your HFX trades. So now when you're scalping your indices. So now I want to start paying attention to my other, right? I want to pay attention to my other support and resistance lines. Does my 5 minute matter? Does my 5 minute support and resistance line matter? When I'm doing like what we were just discussing? Absolutely not. But now if I'm gonna be looking at like what our trading diva was talking about last night from a scalping perspective, or for my super scalpers, now you can kind of see how that plays on my 5 minute chart. So what you're seeing is how my time frames all roll together and how they play together. All right. I'm actually going to stop right here, right? Because I don't want to go too deep without you guys, before I can kind of show you next week how this plays together. I kind of want to kind of leave it at an even balance, where we kind of, where we really operate in understanding. Because when we get back over here and we start talking about these tools, then it's like, you guys are gonna be like, oh my God, right? And it's like, and as you start, once that light bulb goes off, you'll be, oh my God. When you start seeing this market, it's gonna be like, oh my gosh. So, all right. Questions, comments, testimonies. I got a wow. I'm gonna take that as a good thing. That's a good wow. So questions, comments, testimonies. Do we see the market a little bit clearer tonight? Are we seeing things just a tad bit clear? Because when you log on, I got a wow. When you log on to the charts, right? This is ultimately what you see. So, awesome. Thank you. So when you log on, this is what you see. And you're sitting here on the 15-minute. This doesn't tell you anything other than get my 10 pips and cash out, right? That's what that tells you. What I need to know is, where am I at? Where is the market going? What is it doing, right? That's what you need to know. And so you see how the tools, they, oh, this is what I didn't tell you. Let me make sure I get it all. So I talked about the harmonic scanner, but let's real quick, it's only gonna take a second. What the vibrata does, right? These alerts that are finally coming in a little bit, what it does is it comes through and it triggers here, right? It'll trigger here. It'll give you a trigger here. It'll give you a trigger. So every time, so now we know we're in a channel, right? We know we're in a channel. We see that, but the vibrata will trigger at these support and resistance lines. The vibrata, this is where these triggers come in, right? This is where all of these triggers happen. This is my harmonic pattern. And when you'll start getting triggers as this turns around. So that's what it means when it says it does the heavy lifting for you, right? That's what it means. It's not just come on. And this is why the 5 minute, there are so many that take place on a 5 minute, because if I look at this right here, right here, I have a 4-hour candle and it's just going in a buy. But then let me show you this and then we'll get ready to transition this call. So as I'm looking right here, right? So as you see this, right, that's that green candle, that's my 4-hour candle. But inside of there, look at all the candles that take place inside of this one. I come down to my 15, look at all of the candles inside of one 4-hour candle. And remember, this one just started, right? This one just started. Actually, let's do it this way because I really want you guys to see it. Let's go to the one that's closed out. Let me move this over. Can I move it over? All right, so let's move that over. So now we're on the one that's actually closed out. So here's my 30 minute. You can see everything that took place. Drop down to my 15 minute. Look at all the candles that took place in there. And I drop down to my 5. Look at all the movement. Of course, we're moving sideways right now. I didn't put it on one that was in an uptrend. You'll notice it's in an uptrend on that one. But look at all the activity. Look at all the candles that take place. So this is why, because this is a 5 minute trigger. This is a 5 minute trigger. That's a trigger. That's a trigger. This is a trigger. That's a trigger. That's why so many triggers come through on a 5 minute. And so you just come in, and that's why we jump up real quick, top down analysis, right? And that's what we analyze. And that's, like I told you guys, that's ultimately what I wanted to be able to do. Training. Look, see, they're gone again. So training got shifted a little bit. That's okay. But it's for the better because you get to understand how the fundamentals impact the market as well, right? And so that's ultimately what it is. Questions, comments, testimonies. So you say, well, you're gonna the stochastic is not gonna be smooth, right? We're rejecting. So the stochastic is not gonna be smooth, not even a little bit, right? We are rejecting, and so it's a reflection of that. So staying plugged in helps the skill set. You say for sure. Did I say it right? For sure. So I said a mouthful. Light bulbs. I love light bulbs. All right. So any other? We got it. We ready. We understand the market. So we're going to take the next week by storm. So you guys will be able to really just kind of dive in here and really just kind of look at that. And just as a reminder, because I wear multiple hats. So next week, for the entire week, next week, this is why we're using the tools and we're implementing it. But next week, our 9 o'clock call is going to have to start at 9:15, right? My daughter has a camp that she has to be at, and it starts at 9. So I thank God it's not too far away from my house, but so just understand that our 9 o'clock call will start at 9:15. So we're still having our call. We just have to get in and get ready and get set up. So yeah. So you thought you were entering information wrong. No. Trust your judgment, trust your gut, trust your training, trust your skill set, trust it. All right, guys. All right. So let me go ahead.